It has been an incredible run in the markets recently. We want to see where exactly we stand right now and where we could go along with the economic catalyst. I am Dr. Stock, Doctor of Education, and do you know what is the most pitiful food at the Thanksgiving dinner table? It's got to be the potato.
Well, the only thing worse than that joke was probably the fact that I'm losing my voice.
So if I actually go to talking in my regular tone of voice, you can hear that it's kind of thin. For some reason, that deep version of it is a little better. So maybe I need to sit up a little straighter, support from the diaphragm, and let's get right into it. So in this video, I do want to talk about the SPY. I want to talk about the Qs. I want to talk about the strength of the US dollar. I want to talk about what we see with the US Treasury yield for the 10-year, specifically what we're seeing in the markets going along with it in the SPY and the Qs. And then I'll tell you later in the video about the Patreon where you can see my buys and sells. And I'll tell you about my options course. And I'll also tell you about the free stocks from Moomoo. In the meantime, let's get right to the economic calendar. So tomorrow we have initial jobless claims coming out at 8:30 a.m. We also have more Fed speech at 9:30. And if we go down through there, we get the WASD report, which actually could be something that as we hear about the agricultural supplies that are out there and the demand that's expected out there, that could actually be something that could be inflationary or disinflationary or deflationary. So that could actually be a little bit more of a catalyst than we give it credit for. That's going to be interesting to see what that says when it comes out. And then we have Powell speaking to us at 2 p.m. Then on Friday coming up, we have more Fed speech followed by Michigan consumer sentiment. That's going to be big for us. We want to see what they have to say about the inflation expectations. If we want the market to stay bullish, we want the inflation expectations to go down. We want the economic outlook to go up. So we're going to keep on watching for that, and that could also be another catalyst for us to watch in the market. So that's what we have coming up over the next 2 days this week. And I do want you to keep in mind that we actually have inflation reports coming up Tuesday and Wednesday of next week. So also don't forget about those. So I'm going to switch from there and I'm going to go over to what we have in TradingView. And we're going to start off with SPY. We're looking at the SPY, which tracks the S&P 500. And if I snag this trend line that's down here, I can always put one back later. I'm going to drag it up to the top of this so we can see more recently where we've been. And if I move my cursor up to where we were at the top, right about there. So we actually have a high wick on this candle going back here to October the 17th. And that one came in at a high price of 438.14. Today, we came up to 438.09. So we did not quite break that double peak. We almost got there. And so that could be something that could be a little bit of resistance for us. Maybe we see a little bit of softness. Do we have any evidence for that right now? Is there anything looking at the charts? We even have a nice long bottom wick on this thing that we saw when we sold off throughout the day today that we actually recovered quite nicely. So let me zoom out so you can see that better on your screen. We even had a little bit of an inverse cup and handle pattern here, a little bit of spike at the end of the day, not able to return to the previous high that we had. So if we actually go to a higher time frame there, let's go to the 2-hour chart and see what we see. And I'm going to zoom in on this part right here. I'm going to show you two things. One is that you can see we're still rising up in the price, or the prices are trending up. We're starting to fall off when we look at the RSI. So this could be a little bit of bearishness, not meaning that we're going to drop back down and retest new lows or anything like that. I still don't think that we have the conditions to see that happen yet. I still think November is going to be good for us. However, I do think that it is possible to come down off this peak that we have, maybe come down and retest the top of this white trend line that we have on here. And that could be, looking ahead to tomorrow, somewhere around 428 would be huge. I don't think we get there in a single day. So we can wipe that off the table. I don't think it happens, but I do think that we could get some near-term softness in this. So we do want to watch for that. And so I think the 2-hour time frame is that time frame to watch. In this candle, I don't know if you can see it on your screen here, in the after hours, there must have been some market order put in on this thing that was way up there. So that one in the after hours, you're not going to see that on the daily chart, and there's not really even a lot of volume to go along with it. So if we go back out to the daily to see what things look like, so what could we possibly expect? Maybe down to a retest of the 50-day, maybe not in a single day, maybe over the next several days that we come back down, we retest that 50, and that would actually be a good thing to retest support at the 50-day, which is this thin blue line that we have here, or even retesting the top of the bearish channel that we had, and seeing it serve and hold as support is going to be good things for further bullishness for the markets. So seeing a little bit of profit taking after this huge run that we had, absolutely natural to see that. And if we do see it, well, that's good because that can reset us up for those prices. Whereas if we try to go long right now, we don't know where the top of this thing is. So to me, I would much rather see that softness, see us come down, find a little bit of support so that we can have a better chance at that direction for what to play for this right now. So if I go to price range and talk about what sort of drop that would give us to go down to the 50-day, that means just over 1%, about 1.2%, and to come down to where we have this trend line, and it depends on what day we go to, somewhere to 2%, a little bit over 2% of a give back, but that would also be putting us back down below the 50-day, so that would definitely be something to keep an eye on. So as of right now, I don't think that we've come out of double top territory. The momentum is good for right now, and like I said, some near-term softness in SPY in the SPY, tracking the SP 500, could be expected, and what we don't want to see happen is we don't want to see us break back down below that 50-day and change course, and certainly not breaking back down through the bearish channel that I have drawn on here for you. Doing my best to keep my voice going here for you guys, so thank you for sticking around for this. So what we see for the Qs, this is QQQ, which tracks the NASDAQ 100. I'll zoom in on that for you, and again, long bottom wick, and this is something, there's a lot of battles being fought over. Are we going to stay bullish? Are we going to keep rising up? There's only so much up that we can experience before we start heading back down. You can see the momentum is still rising, but not as much as we had. If we go to the 2-hour chart on the Qs, what do we see for that? Well, let me zoom back out so we can actually see a little bit more shape here. And once again, the prices here are actually a little bit more flat. We are dropping for the momentum. We are crossing back down below 70, so we're coming out of that overbought territory and sort of settling as we start to trade a little bit sideways. And you can see that, man, did we rip up a couple days ago, and then we got about half of that, and then we got about a third of that. So we are slowing down in that course, and I think that there is some time that we start to come back and pull back from that, experience a little bit of softness. Again, when we look at the Qs, and one of the ways that I played this, I'll tell you how I played this, and I'll tell you where you can see that kind of stuff. One thing that I did to hedge my long positions as we continue to see this rally play out is I'll just take some near-term expiration with TQQQ, and I will take puts against that. That's my short hedge that I have, just a little bit of money against the long positions going up. That way, if we do experience that softness, I can capitalize on that. I did that in yesterday's market. I bought those puts, cashed in on them today, did the same thing today as we experienced a little bit more upside, especially as we came into the close. And I think that after all this up, that it's natural to experience just a little bit of down. So now let's go back out to the daily. We got this peak over here, this peak over there, and there's a 5-cent difference. That this peak that we had back on the 12th of October is actually 5 cents less than the peak that we had today in the market. So we're not quite clear of that double top. Maybe we get that softness coming back off of that. Maybe we retest the top of this trend line that we have here. We want to see that hold as support for further bullishness. Let's go from there. We're going to go over to NVIDIA, and you can see this long white trend line that I have coming across here. We did break up above that, which is a good thing. And this wedge that you see drawn on here, this little tiny horn-looking thing that I have, let's go down to the hourly chart so we can see a little bit more about it, because I think on the hourly chart, we have a little bit of a rising wedge taking place here. Goes along with what we see with SPY and QQQ, that possible that we start to see just a little bit of softness come into that. Maybe, possibly leading up to those earnings, which is on November the 21st. The more that we run up to those earnings, so if we start to hit that 480 level, things start to get a little bit frothy for us for NVIDIA. Now, mind you, it depends on what the rest of the market is doing around that time. That I do think if we get the run up to earnings for NVIDIA, just like we saw back in August, it is possible that we sell off following those earnings. So I want to be watchful for that. If we sell off leading up to earnings, then I think that can make a case for a little bit more bullishness for those earnings to come out, for that surprise to come out. And it'd be nice to hear about more commentary on the China headwinds for them, about how much they're impacted by the sanctions that have even been put out. I think even despite those, I think they're really going to be set to impress us after all the earnings calls that we heard, that the big companies just cannot get enough hardware to support the business endeavors that they want. They're trying to spend money hand over fist to get a hold of all of it on their infrastructure spend, and I think NVIDIA still remains at the heart of that. So let's move on from there. I want to put up DXY, which tracks the strength of the US dollar, and it is possible that we're starting to see a bearish pennant form up here, and we're just hugging that 50 period, that 50 hour that we have. Broke down below it, still have it as support. Now we're fighting over it in this most recent hour. The RSI is down below 50, which is bearish. It is possible that if that 50 fails, that we do break down below that, and a weakened dollar down to, right now it's sitting at about 105.32, it looks like. A weakened dollar down to about 100, I should say. That would be very good for the markets to watch it continue to drop off there. We don't want to see it continue to weaken much beyond that, but also a strong dollar can be bad for the markets. And I've shown in previous videos how it runs contrary or in contrast or in opposition to, runs inversely of what we see for the SPY. So this is one we want to continue to see it drop. And importantly, breaking down below 105, like we saw here for this previous valley that we have on this That's one that went down to about 105 and then bounced off of that. If we push down below 105, I think we're in very good shape for the markets to see more upward movement. Now moving over there to the US 10-year Treasury note, looking at the yields on it, and I hope that we don't get a double bottom here. It is possible that we bounce off of here. Right now, the RSI looking pretty oversold on this one, so maybe we come back up, and then it's all about the retest. How much higher do we go? Right now, we have a slight trend starting down this way. There we go. I'll draw that arrow or that line on there. There's the trend line for that one, and let me put another trend line on here for you. There we go. So that's where we find ourselves right now. And if we come back up and retest that, that's fine. We don't want to see it go back up above 4.6, for example. Dropping down below 4.5 is going to be great for us. So we want to see that happen. We're currently just below that right now, but solidly breaking that is going to be a good thing. And just like what we saw with the strength of the US dollar, give us a solid downtrend on this one. The uptrend that we had here, this is all the selling that we saw in the markets. This is all the market dropping as that yield continued to climb. Now that this is starting to come back down on us, as people are starting to buy up those bonds, that's something that our US Treasuries, I should talk about it in this case, that's something that can, in the near term at least anyway, because seeing too much of a flight to safety could always be a bad thing for us. Now, mind you, the big concern with the high yields is the US government's ability to service that debt. So more buying of those treasuries, bringing down the yield on top of it, makes it more reasonable in order to service that debt. The high GDP number that we got for the past quarter also helps us out. So we want to keep that in mind as well. So if you want to see how else I'm playing these markets, you can go over to the Patreon, sign up, go over to the Discord. That's where I post my buys and sells. Got an awesome community over there. Very passionate, very excited people. I couldn't be luckier than to have them. My options course is also available over there. So go ahead and check that out. You can figure out how to amplify your portfolio through the power of options. And if you're interested in the Moomoo trading platform, you can get up to 16 free stocks by using my link. That's down in the description. So go ahead and check that out. Each stock valued up to $2,000 a piece. Here are your deposit levels. Here are the free stocks that goes along with it, and their options analyzer tool that they have, and the options calculator, and the learning materials that they have, the user interface. It's absolutely a wonderful trading platform. Go ahead and check it out. So to summarize about the markets here, the SPY, the Qs, I think that November could still be very good for us. Now, we're still going to have to watch the economic reports. We still need to watch what we have going on with the strength of the US dollar. Still have to watch out for the treasury yields, the bond yields, see how they're all doing for us. And just there's a lot to watch. Geopolitical tensions, all that kind of stuff that we can't necessarily account for on a day-to-day basis, but ones that will most definitely impact the markets. Those things aside, if November keeps on going on the trajectory that it's on economic report-wise, that inflation reports come in sort of soft for us or even sort of even for us, those are good things. If those start to really move up on us, then that's something that can, of course, change that. And then labor reports as well, anything that we get for the initial jobless claims, for example, that's something we most definitely want to watch. The Fed's going to keep on coming out and talking to us. I don't know that what they have to say right now is as impactful as the idea that they're done raising rates for right now, and the next thing coming our way could be that cut happening sometime, most likely in 2024. That's more for another video. So where do I think the markets are going? I think the markets still have more northward movement to march up for. I do think that there is going to be a little bit of choppiness on the way there before we start that next downward part of it. Who knows when and if that's going to happen? That's a further analysis down the road. So for right now, I think that we get to enjoy that movement. I'll put out my short hedges if I think that we're starting to get to a frothy place for things, just like I did these past 2 days. So we'll see tomorrow if that pays off for me or if it's something where my longs get to benefit anyway. So thank you guys for watching this video. I really do appreciate it. I'm going to go drink some hot tea. Have a great day. Check out the link for the Patreon. Don't forget about those free stocks from Moomoo. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.